Hello and welcome to the training. Today we've got quite an elaborate training. Really, it's based around how we research our overall direction. Okay, so if we've been trending down, for instance, for a period of time, and we're suspecting that there might be a reason for that direction to change, then we want to try and see ahead if we can, and that's where fundamental research comes in. Now, in some of the previous lessons, we've looked at fundamental research and how we do it. Now we're going to try and show you maybe some easier ways to do it and the things and some websites where you can go and have a look and have a play around and see for yourself exactly what it is that we're looking at. Now it's all about trying to see into the future. Okay, so the first thing we're going to do is we're going to first of all have a look at our calendar and we're going to see what's coming up. And what we're really looking for is monetary policy. Okay, currency pairs that have got a monetary policy meeting coming up. Now, the one that we've got at the moment during this training session is Australian dollar. Okay, they've got a RBA rate statement and a cash rate coming out on the 4th of August. Okay, now at the moment, that's just over a week away. Okay, so we're already starting to research that on the assumption that either something different might happen, or we're trying to assume, whether they're going to cut rates or not. Okay, so we're really focusing on the RBA and the Australian dollar. Now, at the moment, I've got the Australian dollar US dollar chart up, but it might not necessarily be that we want to trade that particular currency. Now, don't forget that we're always looking for that strength against weakness. Those currency pairs. So, if we suspect that there might be a turnaround in the weakness in the Australian dollar, which we're having at the moment, then really we want to look for a currency which is already quite weak. Okay, and also where the Australian dollar has maybe dropped quite a bit on the chart. Now, there's one I can think of at the moment is the Euro Australian dollar. Okay, let's just have a quick look at that one. Now we know that the euro is in QE at the moment, and we also know that the Australian dollar has been fairly weak. They've recently cut rates not that long ago. They did keep rates on hold in the last meeting, but there is a possibility. There could be some possibilities of change. And why do I say that there could be some possibilities of change? Well, a lot of it is to do with basically keeping on top of what's going on, what's coming out on the news feed, things like that, which is all stuff you know already from previous lessons. But you can see here how high, this is the daily chart on the Euro Australian dollar. Now, for a currency such as the Euro, which is in the middle of quantitative easing at the moment against the Australian dollar, I would say that there could be a reason for us to start to look at this and think, well, that we could see some change in this over the coming months. Now, one of the things that the first thing we want to do is to see if the sentiment is changing at all. Okay, now the way to do this is we've got the commitment of traders report, which we've been through before. We'll just refresh on that. The website for the commitment of traders report is www.cftc.gov. It's one that you should have in your bookmarks. And we scroll down until we find currency legacy reports, and we want the Chicago Mercantile Exchange, and we want the short format. Okay, so when we click on the short format, we get a list of all the different things. Now, if you click Control Find on your keyboard, it'll give you a little drop down, and we just want to type in Aussie dollar. Okay, and it will just highlight everything with the AUD in, and there you can see we've got the Australian dollar, Chicago Mercantile Exchange, and it gives us non-commercial is what we're really interested in, because that's retail traders, people that are trading the forex market to make a profit, whereas commercial is people trading the forex market to hedge, which we also have been through in previous courses. So what we're looking for is we're looking for a drop off in short positions. Now at the moment we've got 93,180 and 52,330 long positions. Now it's always best to keep a print off of the previous reports. The reason being is because you can't find the last week's report, say from the Commitments Traders website. You need to print them off. Okay, very easy to do. Obviously, you just screen print your report and highlight the ones that you're interested in. You keep a record, and then you can look back from last week and see what figures have changed. Are there more people coming into the short positions, or is there more people adding to the long positions? Okay, important to do that so you can see the fluctuations. It's also an idea to keep an eye on percentages. At the moment we're just over 60% on shorts, and what we want to look for is when that starts to get too high, then we can expect to see a bit of a turnaround. Now, why are we looking at this at the moment? Well, because we're coming into that RBA rate statement as we discussed. Now, we know what the commitment of traders. At the moment, we're still on the biased for short positions. Now, what tends to happen is, obviously, the sentiment will change after there's been a change in the fundamentals. Okay, so one of the things that we can try and do is assume the data that we've had out from the previous monetary policy meeting minutes, and then to see what has changed and if it fits in with what on this occasion the RBA is looking for. Okay, so the way to do that is it's best to get the data straight from the horse's mouth. So we go to the Reserve Bank of Australia website, which is www.rba.gov.au. We go to monetary policy. Okay, and we want minutes. Okay, this is the minutes. This is the meetings that they have regarding their why they're keeping rates the same, cutting them, or keeping them on hold. So we go to the last one, which is the 7th of July. Now there's quite a lot to read there, so I'm not going to go through it all, but we're just going to try and pick out we're just going to look at the bit at the bottom, which is considerations for monetary policy. Now there's a few things in there, and in fact one of the things that I would do is have a look, go through there and see if you can pick out what it is that the RBA are looking for. Okay, that's the important thing, is to find out what they're looking for, and then you can assume to see whether it's happened or not. Okay, now the best way to do that is obviously read through it. Now a lot of the times, it's not as easy to understand, but there'll be a few things there that you won't understand. There'll be a few things that you think, oh, okay, yeah, I understand inflation, I understand GDP, I understand exports. Okay, now we know that Australia is heavily reliant on exports as a country. We know that because we've discussed that in the past, and it has a correlation with China's growth as well. If you read the whole report, you'll understand that a little bit better. Now, what we want to do once we understand what it is that the RBA have been looking for. Now, their decision on the last meeting was to leave the cash rate unchanged at 2%. Okay, the cash rate being the interest rate. Now, they're coming up to another meeting. People think that they may cut. People think that they may hold the same. We want to know if they're going to be hawkish or if they're going to be dovish. Now, how do we know if things have improved? Well, okay, we can take the long way round. We can go through the calendar and we can go through all of the Australian dollar data since the last meeting on the 7th of July, and then try and see if it's all got better, got worse, has it improved, has it not? Or there's a great little website called, which we'll go to now. It's called www.tradingeconomics.com. Okay, now on that website, you get the full link there to where it is that I'm looking at is /country-list/inflation rate. Okay, and then you can change, or you can go to each individual country. It'll tell you what the last rate was, the previous rate, the highest, the lowest. Okay, you can filter it. Okay, we go down to Australia. Okay, so Australia there, you can see previous 1.3, last was 1.5. So inflation has actually increased from 1.3 to 1.5. Now, if we actually click on Australia, you'll get all the filtered information regarding Australia and what's been happening over that past time. There's even a rounded up version of the monetary policy report down the bottom. Okay, and related articles. You can see the forecast there as well. Now, there's all sorts of information here, and the best way to one of the things I like to do, if you scroll down sort of where these boxes come up with all this data, and you can see here, we can see what's improved and what hasn't. Inflation rate, okay, 1.5, previous 1.3, okay, so that's improvement. Inflation rate month on month, showing an improvement. Consumer price index, slight improvement. Core inflation rate, a little bit of a drop on the core inflation rate. Core consumer prices, slight improvement. GDP deflator, a little bit lower. Producer prices, slightly higher. Producer prices change, slightly lower. Obviously, the key things that we want to look at. We want to look at inflation rate month on month, consumer price index (CPI). They're the first three. There's a little plus sign here that you can enlarge, and we want to have a look at unemployment rate, okay, and GDP. So you've got GDP there, GDP growth rate 0.9%, above from 0.5. Annual growth rate 2.3, so slightly dropped. GDP's slightly dropped, okay. And then you've got the different sectors. We're not really interested in different sectors. Headline figures really is what moves the markets, okay. Unemployment rate slightly come up from 5.9% to 6%. But then if you look at full-time employment, you can see that there's more full-time employment than there was previously, okay. So it might be that we've lost some part-time employees here that are now claiming benefits. Employment change, okay, so we've only had a 7,300 persons employment change, whereas the one before we had nearly a 40,000 unemployment persons. But the thing to look at is those key figures really. We look at inflation, we want to look at GDP, we want to look at employment, labour and wages as well. Wages is one that we want to keep an eye on. 1129 Aussie dollars a week, opposed to 1123. So wages have increased by like $5 a week. Wages in manufacturing have increased. Labour costs have actually gone down on the index point. Okay, these are the things we want to keep an eye on. Okay, so overall there's a fairly decent data been out since the last meeting. So, and if we just go back to that original chart there, okay, so we can see what happened when the inflation started to drop. The RBA cut rates, it got down to 1.7. It went down to 1.3. Then it's had a little jump to 1.5. Now, so the next thing we want to keep an eye on is inflation to see if that gets any higher. Now, because we've had a little bit of a jump in inflation, it's probably, we can start to assume that the RBA will possibly keep rates on hold. Now, if they keep rates on hold, then that's going to give us, and that it's going to give us an assumption that things are starting to slightly improve. They're certainly not getting any worse. What we also want to look for is then that rate statement as well on the 4th. And now the rate statement is the most important thing, okay? Because that's going to give us the insight to what they're thinking, okay? What they're thinking in Australia, what Governor Stevens is thinking, okay? Are we looking hawkish? Has exports improved to China? Has it got worse? These are all the things that they're going to come out with. Basically what's happened. They don't always do a statement if they keep the cash rate the same. Okay, so if they don't, then we'll have to look out for the monetary policy meeting minutes, which will be a little bit later on. But there's quite a bit of data sort of coming out that we want to be looking at, regarding the Australia at the moment, and also looking at that COT report as well. Now we have got Governor Stevens speaking this week as well, so we want to keep an eye on that, see what he has to say. I think he speaks on Thursday, July 30th. So we're starting to make assumptions on a country which is about to have a rate decision. We've looked at their past monetary policy meeting minutes. We know from that what it is that they were looking for. We've then looked at the evidence, our Trading Economics website, where we can get all that data compiled into a nice easy look for us, so that we can assume what's improved, what hasn't, and then we can think, okay, so then we can make, as traders, we can then make a guess and an assumption of what we think might happen in a week's time, whether they're going to keep rates the same or whether they're going to cut rates. Now, if they were going to cut rates, if the data was looking like they were going to cut rates, then we could start to look to try and get into sell positions on any pullbacks in the current trend, which is downwards. Okay. However, we think they might hold rates the same, so things might not change. The continuation of that sloping down trend on the Aussie dollar may continue, but then it's time for us to start to make assumptions on the COT report and start to look at those figures. Okay, look at those figures, see if there starts to be a change. Have a look at the commodity traders chart. That's also in the training as well. I think it's the intermediate course, the timingcharts.com. Okay, have a look to see if we're starting to get a change in sentiment. That's basically the COT report just shown as a graph format. Okay, just the Australian dollar. The blue line is commercial traders. The green line is the large retail traders. Okay, so at the moment you can see, obviously commercial, they hedge, so the trend is still up. Retail traders, they follow the trend to make money, and the trend is still down. So there's not really a change in that. But probably what we will start to see happen is it will be more noticeable in the numbers first, because you'll start to see them drop off on the short positions, and you might start to see the long positions start to pick up. Okay, so it's time to start looking at that and then thinking, right, okay, what can I trade it against? Well, it's high against the euro. Okay, do I need to keep an eye on the euro at the moment? What's happening on the COT report there as well. Yeah, you should do really, but overall we know that the euro is on a long-term weakness point at the moment because of the QE program. Okay, so it's worth keeping an eye on it, but really it's the Australian dollar that we're putting in focus. If that strengthens, then it will strengthen against a weaker currency, certainly. Now, going back to just a quick example, without having to go through the data and stuff, you can see how these charts can take effect. If we go back to, say, you can see where there started to be a change here in the trend. If we go back to the sort of early first weeks of March, you can see the commercial traders started to sell off their currency opposed to buying it. Retail traders started to buy the Aussie instead of selling it. So there was a change in the COT report between the 2nd and the 16th of March. Now, if we go back to that chart and have a look at in that first week of March, you can see how it started to change. You see how the euro started to get stronger against the Australian dollar. Okay, the Australian dollar started to weaken off. At the same time, the commitments of trader reports, more retail traders started to sell the Aussie. Okay, so you can see how how that coincides with the COT report. That change also reflected a change in the price action as well. Okay, now a lot of the times, these moves will already happen before the COT report shows the sentiment will change very, very quickly. which is why we have such things as our candlestick patterns as well, to give us indications that the change is happening. So this is long term, looking at long term research and thinking, right, okay, I've got a currency here which is very high, the euro against the Aussie dollar. They're both weak currencies. One of them is going to change. The RBA, the Reserve Bank of Australia, have got a monetary policy meeting coming up. So we want to try and investigate, what's happening. So just to recap, we've gone to the RBA minutes from the last meeting. We've read through them, so we know what the RBA is looking for to make changes in their monetary policy. We've then gone to the data and we've looked to see what has changed since the last meeting. Okay, we've looked at the COP report, the past COP report. We've looked at this week's. We've looked at last week's, maybe the week before's, to see if there has any change. See if is there any change yet? Or a short position is just getting added to. Okay, we've then compared that on our graph. Just have a quick look on the graph, see, well, it doesn't look like there's much change going on there. Okay, but we're still sitting a little bit uncomfortable with the fact that this euro is still very high. It might be that we set an alarm on our charts to start looking at the 153 area, that previous point of resistance. Okay, and maybe looking at it there. Obviously, when the RBA do release their statement and the cash rate either stays the same or it cuts, we then listen to the RBA rate statement and we can go, well, actually, they've held rates the same, so nothing's really changed, but their language suggests that things are improving. So at that point, we then go back to our chart and we start to look for candlestick patterns and we start to look for early signs of reversal. Okay, on the bigger time frames, we're looking at trading these on the bigger time frames, and these are the sort of trades where we're looking at trading them down to 1-4, big, 5, 6, even 1,000 pip moves over a longer period of time. Now, the state of the markets have been recently, we've not been able to have trades like that of such, but we are looking for some turnarounds. We are looking for some really good trading opportunities, especially now things have settled down on the Greek situation in the euro. But obviously, trying to keep this not relevant to what's going on at the current time because it's a trading session, so it's just used as examples at the moment. But that's just one way of just looking at one currency. It might be that when you're doing this trading session that the Bank of England are just about to come up to a rate decision. If that's the case, then you want to be going to initially the Bank of England website, looking at their monetary policy. Okay. Reading through their inflation report, reading through their monetary policy, reading through their minutes. Okay, then looking, so you've got MPC minutes there. Then going through, their data on the chart, looking up the United Kingdom. Okay, looking up their inflation rate, going to the COP report and looking for control find, looking for pound. Okay, GBP. Looking for the British pound sterling, see how their short positions are changing, into long positions, looking back through those. So it works, it's the same for every single currency. It doesn't really matter which one it is you're looking at. Okay, so I hope that's helped. That's basically how I do my long-term research. When I'm looking for a change in the markets, when I'm looking for something, if I suspect there's an element of something going on, a lot of it will come with experience. For instance, the first thing that I spotted about and why I started to look into the Australian dollar was purely from the Aussie dollar US dollar chart, and the fact that the RBA, the Reserve Bank of Australia, have been trying to get 7.5 as the price for the Australian dollar against the US dollar for quite some time, and it's now dropped below that. So it might be that we start to see profit taking on the Aussie dollar, which will cause a sentiment pullback. It might not be that it lasts forever, but it might be that it does give it a pullback of 82. Up to 82, okay, and then it might sell off again, okay. But there's still a good few. There's still a lot of pips to be had there. It's just spotting those early signs, and especially with the fact that we've got an RBA meeting come up. That's why we've got that one in focus at this time. Okay, I hope that helps. There's quite a lot to take in there, so we'll do there's the Q&A session as usual on Sunday evening. If you can make it, then great. And I shall see you in the next training session. Bye for now.